Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the crypto market recap. Let's hop into these charts, see what the story is and what it may be. And remember, if you're interested in any of the services I provide, please check the links in the description below for both the Patreon and Discord. Okay, so this is going to be a crypto recap, but I am going to go over the U.S. equity markets and a couple commodities and the U.S. dollar. Mainly because I want to talk about what's coming this week in regards to Jerome Powell's talk. So Jerome Powell is set to talk on Wednesday, and this is coming after the CPI data of August. So last week the CPI numbers came out, and if you were paying attention, you know that data was very negative. It broke expectations to the downside, unfortunately. We have a rise in inflation, and pretty much it just indicates that inflation is showing no signs of topping, even though the July CPI report did show positive signs. So there was a lot of hope that the August CPI data would reflect that, and we would have two bullish months in regards to inflation either slowing down or even decreasing. But we did not get that, and the markets reflected that with a pretty massive sell-off once that data came out. And now we're going to see how the Federal Reserve is going to respond. The indication is getting ready for another 75 basis point, but there's even fear that there might be a full 100 basis point rate hike. And you know, that might be what the markets are pricing in. In my opinion, that's probably what they are pricing in. But if that happens, it's very likely that the Federal Reserve is not getting ahead of inflation, and this is just signs of them losing control. And that's not good for the everyday person. That's not even good for the well-off unless you're positioned well. So look for a massive week, starting Monday, and then Wednesday will be a big day, deciding on how, depending on how Jerome Powell responds. If he's too hawkish, then the markets are going to come down harder, and if he's too dovish, the markets may still come down in the fears that he's wrong. It's going to be really hard for Jerome Powell and the Federal Reserve governors to instill confidence, especially after that CPI data. But we'll see what happens. Starting off, we're going to look at the Dow. So this is the monthly. Pretty much it's been holding its, I would say, fairly steep trend line since 2009, 2008. And now we're coming back into it to test it out. How long it's going to take? Well, we'll see. It'll probably take a couple months to a year or so. It's on its way. Depending on what may happen policy-wise in the U.S., things can change. If something happens where the Fed just goes bonkers and says, "Oh, we're going to start buying, equities," then you'll probably see this thing skyrocket. But again, that's not a good sign. That's not a healthy sign. But it does mean that you would see all of the equities, all the stocks of at least major cap stocks start melting up. But as of now, just looking at the charts for the Dow, completely just going in line of what I've been mapping out for really since like the middle of the year to the beginning of the year. The squiggly lines are from then around February to March. Pretty much following. Since the summer. Yes, since the summer. So pretty much came up to the trend line, bounced off of it. Now it's probably going to come down towards this high pivot, which is the COVID highs prior to the COVID drop. Okay, and then once that breaks, look for this ascending trend line to be touched. It's very important that the Dow holds that. Okay, if the Dow does hold that, then there's a really good chance that we're going to see a pretty significant rally in 2024. Okay, or at least a mid to late 2023, early 2024. If that doesn't happen, then hey, we're probably going to come all the way down towards 18,360, which is going to be challenging this bottom pivot from the COVID drop. And in my opinion, a lot of this, and you'll see this on the S&P chart especially, but a lot of this was just the Fed pushing the markets up during the COVID lockdowns. So it's very likely as they're unwinding their balance sheet that all of this goes away. How fast it goes away will really be important, because if it happens too quickly, then we're going to go into a worse crisis than now, where there's a lot of the world that's in crisis. So the more stable the drop can be, the better. But I would say it's very naive to think that this will not be challenged. Okay, this was not a very natural rise, considering 2020 was a complete lockdown for most of the Western world and even the Eastern world to a degree. So a lot of this is going to get taken away, whether it's 68%, or if it's going to be 78% or 80% or even 100% of the move. More of it's going to be taken than what we're seeing here. So let's pull a fib just to get an idea of how much of that rise from the lows has been taken out. So we're just coming into a 38.2, so just under 40% has been traced. I think it's very unlikely to think that's how low we're going. I think we're going to at least 50%. Right, so that look at the confluence, ends up being right at this ascending trend line, which has been held since 2008, 2009. So look for further drops, but this is the monthly chart, and the weekly chart is where I map this all out. It's going to take time. Okay, we're looking anywhere from the beginning of the 2023 we hit these levels. If we lose these levels, then look for most of 2023 being a fairly bearish year. Okay. Let's go on to the S&P, because that, again, it's going to rhyme with the Dow. The Dow is the big daddy, but it's going to give us a little bit more information, I think. So the S&P, as you can see, has been far more active in taking out its COVID channel, right? So it's very similar to what you saw on the Dow here, but looking at the monthly, you see, look how steep this rises, and now we're seeing that getting taken down. All right, I think we got well past the 50%, or just past 50% retracement on the S&P, and for the S&P, I see at least a 78.6 retracement. So yeah, we were just approaching the 50%. We got very close right over here, and now we're back at the 38.2. Look for us to get back into the fair value channel, which is around 61.8 to 78.6. Okay, so the fib levels aren't that important. They're just giving us a general idea of how much of this channel is probably going to get eaten away, and in my opinion, the entire channel is going to get eaten away, or at least the majority of it, at least all the way down to the bodies. Maybe not this bottom wick, because I do see the fair value channel being the ultimate level where you're going to see the S&P rest and then continue for the decades to come rising, right? But the first level it has to get to is the COVID highs, which are 3394.4. So unlike the Dow, the S&P has not gotten there. All right, so this is what we're likely going to see over the next coming months to maybe a year and a half, of these levels being challenged by the S&P. But as we are observing, we are making our way slowly there. Had a beautiful bounce, came to the highs of this level at 42.45, and now are coming lower. These arrows, these paths I've had since pretty much, I want to say, the early spring-ish, maybe early summer. What was it, May? Yeah, May-ish. So it's just ideas of where we could likely see price get to, and in my opinion, it's mostly following the red path. I will say the bounce did go past my expectations. I did see a bounce coming towards this level, but I did not think it'd get all the way back towards the top of this general range level, this general range zone here, okay? Because I did see this becoming a range zone to then get the fuel to break back into the fair value channel, which would break under the COVID highs, okay? This is going to be pretty hard to break through. So I saw major consolidation happening here before that happened, but it did break my expectations. It even broke this high pivot, making this new high pivot here. So potentially we may get a little bit more upside if this is going to be creating a bearish rising structure. But right now that doesn't look like the case to me. It looks like the beginning of a sideways range for probably the most of the year, unless policy changes. You gotta be wary of that. Policy can change how these charts are going to build out going into the future. Let's look at the NASDAQ. So NASDAQ, very similar. It finds itself in a pretty nice channel. Almost broke through and stayed above, but just couldn't get that oomph. Then this was the drop from. This was the drop from the CPI report. As you can see, major denial off of my green zone and the top trend line of this descending channel. So it's likely going to come back towards the median line, which happens to coincide with this wonderful level of support, which is about 11,100. Look for that, and then this trend line right here, this horizontal line right here, is the COVID high. So it's the COVID pivot high prior to the drop. That's going to be a major level as well. So as you can see, a lot of S&P and NASDAQ have not gotten to their levels, but the Dow has gotten at least very, very close, or right at the COVID highs, right, prior to the drop. So the S&P and the NASDAQ have yet to do this, so it's very likely they're going to. How long it takes, not sure. I think policies will make it happen sooner or slower. It may take some time if the Fed starts becoming very dovish. Even if they become very dovish, in my opinion, the structure is pretty clear. We want to come lower. Okay, we want to come lower, at least coming under this level here for some time, and then breaking through to the upside. But if the policies end up being very hawkish, then that could really happen a lot quicker, right? So if Wednesday comes around and Jerome Powell's like, hey, we're gonna do 100 basis points, and then the next month we're going to do another 100 basis points, then you're going to see the markets really start selling off really, really hard. This is definitely one of these weeks you want to be paying attention, especially on Wednesday and Thursday morning. Okay, and let's take a quick look at the oil markets as well. So oil markets, I've been mapping out the oil markets for a while. If you were in the Discord right when I started the service, it's one of the earliest charts I've ever made. Have not really changed it. The only things I've added on are the squiggly lines and the green circles here. And this rising trend line here is for a shorter time frame. But off the monthly, came to the zone that I've been looking at for quite a while, wicked into it once, then wicked into it again, and sold right off. And now we've had a 3-month surge down, and now we're into the 4th month, 12 days in, and it's looking pretty strong to possibly go even lower, which is interesting. It's not unexpected though, because I do want to say, expect oil to go lower as we're going into the U.S. midterm elections. This happens every 2-year cycle. As you go into the midterm elections, you're going to see the oil prices go down because politically it's very good. But once those midterm elections happen, you're going to start seeing the U.S. buy again. So you're going to see that buying just start rolling into the markets. And it's come to one of my major levels, which is about $85, $85.30, this level here. And then the next major level is $75. And then the major level, $60. Okay, it breaking under $60 is likely going to indicate we have a big issue in the oil markets. All right, it's very unlikely to break this level. It's not even likely to get to this level right now. It's more likely to come towards this level, sit here, and then maybe take a stab down towards $75. And then once the midterms elections, you're going to see that demand to buy oil skyrocket out of the U.S. So we're likely going to see oil coming back towards $100 and maybe even higher. Okay, if you're looking for cheap oil, you're hoping for then it getting to 103 to 110 and stalling out, creating kind of like a Adam and Eve double top. That's what you're hoping for, right? You're hoping for something like that, where it'll come in, make this high here, and then scoot down. It's very unlikely, to be honest. It's more likely that oil is going bullish for multiple years. All right, this trend line here breaking right here that you see here coming down, this was extremely bullish for oil to break through. It's possible oil can come all the way back down and start touching $41 again. And if it holds this level, holds this ascending trend line, it's still bullish, guys. All right, we're talking about decades going into the future where oil may become extremely expensive. All right, you got to keep that in mind. These monthly charts, these weekly charts are very important when you're looking at these sort of assets, because the way they're priced in is thought about in a multi-decade, well, I should say, half-decade span, anywhere from 5, 10, 15 years. Oil, they're mapped out on how high they want oil to go. And in my opinion, once the midterm elections start, finishing up, no matter who wins, you're probably going to see oil get back to $100 very quickly, maybe start bullish consolidation, and then start attacking these highs up here. I'll be the first to tell you, I hope that doesn't happen. No one wants to pay more at the pump. No one wants things to be more expensive, but I don't see how it won't happen. Okay, especially after the CPI data that came out for August. It was very bearish, and it showed signs that oil was going to start ramping up going into the 4th quarter. So, guys, just be careful out there. Things are going to get harder, unfortunately. All right, let's take a quick look at the dollar, and then we'll go on to crypto. So here is the dollar. So dollar, very bullish, absolutely unbelievably bullish. Pretty much what you're seeing here. Let's go on the daily real quick, and then we'll zoom out. So beautiful candle here, right? So if you're bullish dollar, you love this candle, and this was off of that CPI data, really being absorbed by the market. Essentially, what's happening is foreign countries are falling apart, right? Their foreign currencies are falling apart. So a lot of those countries, mainly Western countries, mainly Western Europe countries, are just trying to accumulate as much dollars as possible. They're trying to get into a safe haven because their currencies are unfortunately falling apart. So the dollar is melting up, right? And I actually think this is just the beginning. I do think that dollar will just keep going higher. We are seeing potentials of a topping structure here. Okay, it's not confirmed yet. It's very immature. This last candle here, this daily candle here, was very nice to see. So all right, so this candle here that showed some signs of slowdown was nice to see. A false breakout almost. If we can get more energy like that, where you have false breakouts then going lower, then the potential of this possibly being like a bullish flag or some sort of bullish consolidation becomes less likely, and then we can maybe come back down towards 108, attacking this high trend line here, this support zone here, and then breaking lower. That would be the best case scenario if you're looking for dollar to come lower, technically. But fundamentally, there's a lot of things pushing dollar higher, especially the war in Ukraine. And then as we're going into winter, and you have countries like Germany and a lot of these Scandinavian countries that are not prepared. I don't understand. They really are not prepared. If you look at the numbers, go on Bloomberg, look at the reserves, look at the numbers. They are not prepared for what's going to happen to them in winter, and I think they're just lying to themselves. There's not going to be food. There's not going to be enough heat, and it's going to become too expensive for the majority of people. And I do think the run to dollar is going to be absolutely unbelievable. I think we're going into something where it may not have ever been seen before, and I don't say that lightly. I hope I'm wrong, but the charts are really agreeing with me, because if you look at the weekly, this is looking parabolic, and not just parabolic at the end. This looks at the beginning of parabolic. Okay, you had this fairly stable trend line here, so you see this fairly stable trend line, then you have this steep trend line now, and if we start breaking the highs within this week or 2 weeks, pretty much in October, all right, so if this happens mid to late October and we break these highs, this will start becoming really parabolic. Okay, really parabolic, and who knows where we'll stop. In my opinion, if that happens and we start breaking past 111, we'll go to 114, and we should see some stalling there, unless we get escalation in Europe. If we get escalation in Europe, that does lead to a lot of these other Western European countries really going into depressions or hard recessions. Then we might see this level getting broken, and the next level's the 120s. And honestly, once we get to there, I'm kind of out of my depth, right? I was very young when last time we were going into the 120s. I was not old enough to know how it affected the market, but I could tell you just from my studies, the U.S. citizen, it's going to be very difficult for us. And for the rest of the world, it's going to feel impossible to really have anything. So I pray that doesn't happen. But I have to be as forthright as I can from what I'm seeing. I don't see it not happening because the charts are really just not they're showing no signs of slowdown, especially on the monthly. Right, we have a couple more days. We have 12 days, 13 days on this monthly candle. So if we can get a very weak week, or next week, a couple weeks, it's kind of like a tongue twister. But if we can get a couple weekdays to weeks, this monthly candle could get chopped down and maybe show signs of a topping structure, at least the consolidation. But other than that, this chart is very bullish. Okay, it's very bullish. Broke this descending trend line, possibly can come back down and test it. But the fundamentals of what I just talked about, in regards to overseas, it really seems to be making that very hard to happen. So we'll have to keep watching it. We'll see what happens with the Dixie going over this set of time. But if whatever happens, if you're in the lemon garden, we're going to be positioned the best we possibly can. Okay, I'm not one of the guys that's going to try and promise the world to you. I'm just going to promise that I'm going to keep doing what I've been doing, keep swing trading the same way I have been doing, and hopefully the success we've had continues forward even in these unknown times coming. All right, looking at crypto. So crypto's been pretty interesting, as you can see. Massive sell-off today. So let's go into that. I believe on the copy trade account, I'm actually in a short, so we're actually looking pretty good. Our swing trades, which we are long, and we're getting into potential opportunities to add on to these positions. But looking at Bitcoin, as you can see, as I mentioned in the last recap, broke this level, then came towards the descending trend line. Didn't get to the actual trend line, got close to the zone, but not too close. And now it's fighting at the 19,930. We'll just say 20,000 to 19,000 zone, which is the 2017 highs. It's very likely that this level gets broken. I talked about it as we were coming over here, and then we had the beautiful CPI data that just took all the wins out of Bitcoin sales. That, you know, if we did come back towards 20,000 or towards 19,000, it's going to be very, very hard for the bulls to hold that level after all of the fighting here, right? There's been so much fighting since we broke this trend line all the way through here. The bulls' best efforts was here, and then the CPI data just took it all away. So if they're going to hold this level, it's a really big ask. In my opinion, it's more likely we're going to see a breakdown as we're watching come down towards this pivot level here at 18,450, maybe find a little bit of support, because there's going to be a lot of fighting to hold this 19,000, 20,000 level, but eventually it will likely give way and we will break towards 16,000 to 15,000 and potentially lower towards 14 to 12,000. Okay, I do want to see how the 16,000s and 17,000s hold, but 14 to 12,000 is going to be very, very interesting for major accumulations. Okay, it's very unlikely 17,600 holds, even though this is a low pivot. Just based off of this rising structure, all the liquidity under here is very, very attractive to grab. Right, so all the liquidity under this level is going to be taken out most likely, and I do think to get most of that liquidity, it's going to want to break through 16,000, and then we'll see if it can bounce from there. Right, if there's enough down there to then start grabbing and looking to go higher to maybe break the liquidity that's going to be up above here. Right, it's going to be back above 20,000, and then from there we'll see if there can be some sort of strength to try and hold 18,000, 19,000, or 17,000 as support, and make something like this, pretty much like a low, then it made a high, and then made a higher low, and then potentially we'll go for a higher low to break through these levels. That's going to be, if that's going to happen, we're going to have to see a lot of bullish activity coming out of the equity markets. The Bitcoin will follow the NASDAQ. And that this week is so important. That's why I started with the NASDAQ, and pretty much why I wanted to start with talking about what the Fed's possibly going to do and what would happen depending on what they do. If they are very hawkish, then Bitcoin's going to follow the NASDAQ. It's the same story. It's the same story. Just right now, what we're seeing is a lot of risk off. So that means Bitcoin, crypto in general, and stocks, are going to get sold into. Okay, everyone's uncertain, everyone's afraid, so they're going into the dollar. Even gold's getting hit, which is normal. Gold usually takes time to turn around in a recession or depression sort of environment. Dollar is usually the first thing to find strength, and then it starts flowing into other markets. But everything that's risk off, like crypto, is going to get beat up continuously as we've been seeing. But we are getting close to major macro levels, specifically the 14,000, 12,000, and I would say 17,000 is fairly important as well. And those will be levels of major accumulation. So even if we are going to go lower than those levels, it will likely take some time. Okay, will likely take some time. And as swing traders in here, it doesn't really matter how low Bitcoin goes. We don't want to go that low. In the long term, we're okay with accumulating. So if you are a group in my, if you're a member of my group, make sure you check out. I did post a bunch of cryptos that I'm looking to accumulate long term, and we are getting to those levels. I will, post again those coins in case you missed it. And I'll try and be as specific as I can with what levels I'm looking to add on to. But Bitcoin being one of them, we are getting towards very attractive levels. All right, but I am expecting at least a fall back down towards 19,000, and then probably lower, going down to challenge 17,600, and then eventually 16,000, and then we should find some activity there, and an eventual breakdown going towards 14,000, 15,000, and then maybe a breakout higher to hold this level again. Okay. All right, so let's go on to DOT next, because we are long DOT as well. And DOT coming into a pivot level here. As you can see, it's starting to tap it right now. Tapped it actually earlier today at 6.347, which is this low pivot here. Unlikely to hold it, especially after all this consolidation here. Okay, so there's plenty of fuel that's in this move to come lower, and probably going to break down going towards at least $5. It's going to be a major psychological level, and that holding as a level is still not likely, at least in the long run, but it is likely for a bounce level to come back towards $6.40, $6.50, and then possibly lower from there. Okay, how low Polkadot goes will be dependent on Bitcoin. All right, we can't lean, when it comes to crypto, we can't lean on any fundamentals. There are no fundamentals to lean on in crypto. There nothing, because none of this stuff actually works in the real world yet. They have proof of concepts. They have tests, all these things. They have potential, but it's all vaporware. Even Ethereum, I love Ethereum. Same thing. It does not work outside the crypto world. It's not being used by any institutional use case yet. It is being tested. It has proof of concepts with a whole bunch of stuff, but it's still vaporware. So we don't have actual fundamental use cases to give us a floor, right? Whereas Apple, per se, has a floor of the iPhone's value. Okay, iPhone sales, Apple Watch sales. There's a floor there you can find, in the chart based off of their revenues and profits. Whereas this stuff, you don't have that. So we have to just go by the charts. And the charts are telling me $5 will be a psychological level, break up towards $6.40, $6.50, and then possibly go lower and even go all the way back down towards $2, $3, and maybe even lower towards $1. It just depends on how heavy Bitcoin sell-off is going to be as it potentially breaks under 16,000, 15,000. All right, let's look at Cardano coming towards this pivot level as well. 44.5 cents is currently where it's fighting at. Likely to break lower towards at least this level here at 39 cents. Okay, over this next week, unless this week ends up being very bullish based off of what Jerome Powell says, it's likely to come down this week towards this level, and then we'll probably see a breakthrough and then a bounce back towards it. And then we'll likely see a consolidation there, and we'll have to see how that consolidation forms. If it's going to be more on the bullish side, bearish side, we have to give it some time to mature. But in my opinion, you're likely going to see everything come a little bit lower. Do not be afraid of this, guys. I know you might be feeling afraid of what I'm saying. This is a great opportunity if you're looking to accumulate. If you have coins, projects that you believe in, that you want to accumulate, this is the time. Okay, and remember, you don't ever want to just ape into something immediately. You want to make sure you DCA in. If you're in swing trades like I am, this is why we don't ape into everything. We DCA into our swing trades. I'm very comfortable to see what I'm seeing, because I believe Bitcoin, we have a fairly large percentage of our portfolio exposed, but it's a lot lower because of the profits we took of previous trades like Link, Ethereum, the FTX coin. Polkadot, we have a decent exposure, and actually not too big. Cardano, Avalanche, Solana, I don't think any of them pass 4% in our exposure, right? So there's plenty of room. We have plenty of powder on the side. So that's why you always want to, at least, don't ape in entirely. You don't even want to go half. You want to go less, because the markets will give you an opportunity to get in at a better price, and it's always worth waiting. You end up finding that you'll make a lot more money being patient and waiting for the markets to give you a better deal. And as you can see, that's what we're getting. So Cardano's first level to hold is this level here, 44.5 cents. Then the next major level will be 39 cents. And then it losing that level, we're likely going to see, so that you can't see in this chart, but there's an older chart, 32 cents is going to be, 35 to 32 cents can be a major zone of support. Okay, so that will be a major level, and that might be the level where we do see that bounce back towards 39 to 40 cents. It getting back above those levels, 39, 40 cents, is not likely. It's not likely unless Bitcoin is showing strength to get past 20,000 again. All right, let's go on to Avalanche next. So Avalanche, breaking this rising structure, came towards this major pivot. Actually, Avalanche is a bit ahead of a lot of the other coins, as you can see. Broke back towards that major pivot at $21.37, and immediately got pretty much denied off of that, and now it's breaking under this low pivot at $17.48. Very likely to get towards at least $14 or $13.50. I actually think Avalanche will hold that level for a little bit longer, just based off it does have a bit more work to get there, but it'll eventually break under there and get towards $8. $8 is going to be a major level for Avalanche. Where I'm going to be adding on is for the members, so just be on the lookout for in any of these trades with me. I will be adding on very soon. We are getting to some interesting levels for a lot of these coins, and also other, opening up new positions on other coins as well. Solana is next. Very similar to Avalanche, but unlike Avalanche, has a major level at $20. $20 to $22 can be a major level for Solana. It will hold that level for quite some time, unless Bitcoin obviously just starts waterfalling through major levels, but I don't see that happening. It's more likely you're going to see Solana slowly grind down towards this level, kind of like this, and then kind of begin, actually let me do that a little bit cleaner, grind quarter like this, then a nice waterfall down, and then start consolidating on top of this. And depending on the consolidation, we'll see if it's going to be, bullish, bearish. Most likely will be bearish if it comes in really hard, like I think it will. But it will likely consolidate in between $20 to $26 to that general zone. Okay, could possibly come all the way up to $30, but depending on how weak I think the bounce will be, I do think the bounce will be fairly weak. It'll range between $20 to $26, and within that box, you'll see that consolidation. And I think the consolidation will likely be bearish. And then the next major level for Solana is actually going to be about like, I think it's like $12. It's one of the major levels that will be coming. $12 to $14 on Solana has a massive amount of activity. So I will be I will be looking to that level to see how price will interact, but I'm expecting a massive bounce from that level, maybe coming all the way back towards $20, which percentage-wise is huge. Anything else? Let's see. Let's take a quick look at Link, because that's one of my longer-term coins as well. So Link, I like what Link has done overall in the sense that it's broken. It's a fairly long-term descending trend line. So from the all-time high, broke it bullish, tested it out a couple times, and then broke up from there. We'll see if we can actually continue to hold that and keep a potential bullish structure here. Okay. However, crypto is not in a vacuum. Everything's following Bitcoin at the end. So even though this does show some signs of being fairly bullish, it is within a range, right? So you have this high here, and then all these lows right here. None of this has really been broken, right? This range, but we did have this ascending resistance level broken. Did find it as support a couple times, but now we're coming back in. We're going to be testing the bottom of this broken structure here, and that will eventually get broken through to this major level at $5.30. It holding this level is it's not impossible, considering that it's still within a range. We gotta respect that it's in the range. Until this is broken, we have to expect that this will hold. Once that's broken, though, look for $3 and possibly even $1.50. Okay, so Link, you can possibly get extremely good deals if we have complete follow through with this sell-off coming forward. Okay, so do not be afraid. Do not be afraid, especially if you are, if you are feeling fear. Just look at this as an opportunity. If you are in the trades with me and you are afraid of what's happening, I gotta tell you, you're probably too exposed. Okay, you're probably overexposed, which I don't like to hear. I'm like a broken record. I annoy myself with how often I say, please do not overexpose yourself. Please DCA into your positions. Use my my template, seriously. Okay, please. Because in the end, you'll make money. Like my trades speak for themselves. In the end, you make money. We literally only lost one trade in crypto, and that was Luna. And it's all based off of not just price action reading, levels reading, but really my DCA strategy. That's the secret sauce, and it's very simple. So make sure you follow that, and this sort of price action won't be scary. It actually be pretty nice to see. I always love to get into positions and then find myself having a better deal and making my position better. Okay, it makes the probabilities of my trade working out higher. So please trade the way I'm trading. I'm not telling you to just use 1% of your portfolio, but don't be using 25 or 50% of your portfolio, especially if you're doing multiple positions, right? If you're just going to focus on one coin that I'm putting out there and you want to use 25% of your portfolio, I still think it's a little too high, but that's a little bit better because at least you have 4 entries into a position. But if you're trying to follow like 3 or 4, 5, 6 trades that I put out and you're trying to do these high percentages of your portfolio, it's not going to work. Okay, unless you have a pretty large size, it's just not going to work. You have to cut it down. In the end, you'll see that you will make money this way. But as we're seeing, Link will come lower, most likely towards $6.70. But I think it's going to come all the way back down, coming down at least towards this level at $6.20 to challenge these low pivots. But I will likely take these out to grab the liquidity there, and it's probably going to come all the way down to start grabbing a lot of liquidity down here, which is about $5.10. Right. So this level is probably going to get taken out. But actually getting confirmed through is a different story. So we may see candles come through, wick through, and then start consolidating again like that, okay? That's enough to take out all the liquidity that might be down here. That's very likely that's down there. But we'll see if we're gonna have continued follow through going down towards 3, 4, 3, maybe even $2, right? But as of right now, I'm comfortable saying we're probably coming towards a low end of this range so far. We'll see if we can hold it or we're gonna break it. I think that's it for now. I pretty much went over everything I want to go over as of now. It's all the same story in crypto for now. We'll see how the markets start behaving tomorrow as the equity markets open up. And then we'll see what happens Wednesday as well. So this is the week to pay attention to, guys. We're going to get an idea of what to expect the majority of this month. All right, everyone. Remember, if you actually before I sign out, if you have any questions, please DM me on the Discord. I'm not going to DM you first, but DM me on the Discord. I will never DM you first. If I ever want to talk to you publicly, it's going to be talk to you at all. It's going to be in the Discord. All right, on voice chat, I'm just going to message you open in the Discord publicly, but I'm never going to DM you first. I had someone tell me that someone was impersonating me or something, so don't trust Digital Lemons that DMs you first. It's not going to happen. You have to DM me first. Other than that, just treat everything else that doesn't DM me first as like a scam or something, or spam. Okay. All right, everyone. Remember, be patient, be vigilant, and be nimble. Love you guys. Take care.